Thanks very much for your company. I am Pius Kojo Baka. Let's now settle for the details. And Finance Minister Ken Ofori-Atta has assured that the 2024 budget will come up with policies or programs that will deal with concerns of private sector in relation to high taxes. The minister is expected to present the budget to Parliament by middle of next month, which will be heavily influenced by the IMF program. Mr. Ofori-Atta has been giving more details about the move on PM Express Business Edition.
As a market-oriented government, there's no question in our minds about the need for the private sector to be able to thrive and for us to gain the type of productivity that we require as a nation and to create the jobs, because there's a limit to what government can do in terms of absorbing jobs. We have, as you know, been able to, once upon a time, bring interest rates to reasonable levels, and then we've gone through this period and with the restructuring where we are going to have to confront how do we get them to have access to capital, long-term financing, and rates that make sense, and that really is what we need to be able to deliver in this coming budget. Exactly what alternatives we have for them to have access to capital, but they all also, I believe, understand the need for macro stability. You know, at whatever rate it is, if it is stable, they can plan. And we are assuring them of our commitment to make sure that the inflation continues to come down, to make sure that the currency at least is stable or continues to trend downwards. That we will. Then our challenge now is finding appropriate capital for them to be able to do their business. And that is what we hope that by the time the growth plan is done in time for the budget in November, we will have inklings of how that would work.
Finance Minister Ken Ofori-Atta there. Let's interrogate this analysis further. Joining us via Zoom are representatives of the business community. First is the Greater Accra Regional Chairman of AGI, Chena Mafelu, and the Public Relations Officer of GUTA, Joseph Paddy. For more on this, grateful gentlemen for joining me on Business Live. First off, let me start off with you, Mr. Akwalu. This must be assuring and some sort of respite to you, having this assurance from the Finance Minister, right?
Yes, sure. Thank you. Good evening to your cherished listeners. And it is a welcoming news hearing from the Finance Minister about what we should be expecting during the next year's budget.
He assured that...
If you follow our advocacy for some time now, we've been very active in pushing for... But we've been very active for pushing for the private sector, and the fact that doing business in Ghana, the business environment is very harsh for private entrepreneurs. And for us to be able to take advantage of the Continental Free Trade Agreement and to ensure that we create the jobs needed for the economic development, was important that something was done about the economic situation. And so it is extremely exciting to hear the Finance Minister really give us assurance about what he intends to do in the next budget. Yeah, the main thing really that he talks about borders on taxation, the fact that he's admitted that in fact the issues of taxes are of big concern to private sector, and the fact that they will look at it in dealing with the issues of tax, reducing some of the taxes, and hopefully taking some of them out, because if you look at the tax bucket, it's a lot. I mean, 1% COVID-19 levy, growth and sustainability levy, several of them, they are really affecting the private sector in a big way. Coupled with the fact that we have to have access to the financing program. They will provide sustainable financing for private sector. And we believe that these are some of the things that are urgently needed. We need financing to expand our businesses, to be ready to produce and be able to export same. Also related is the issue about accessibility. I mean, making it easier for our SMEs to access the financing as well. Overall, we really look forward to that budget that provides the incentives that are needed for the growth of private sector.
I will probably come back to you to tell me which specific taxes you are looking at. But let me bring in the perspective of Joseph Obeng Joseph Paddy for more on this. Joseph, thanks for joining me on Business Live. Now, I guess your sentiments is equally similar to that of AGI's, right? Unmute yourself, Paddy, for me. All right, so let's go back to Chiona Mapelu to conclude his point on the assurance given by the finance minister. And Chiona, I want to ask you if you can pinpoint which of the taxes you are looking forward to being reviewed or scrapped better still.
Well, so that's a good call. As I mentioned earlier, if you look at the tax basket, there are many taxes that affect the private sector and local industrialization directly. Talk about the newly introduced growth and sustainability levy. That is about 5% or so before profit. This is really taking away the money we need to produce. Look at the COVID-19 1% levy. This has limited usefulness. We do not deal with COVID-19 as an issue of urgency any longer. We are looking forward for government to scrap that taxes. Then talk about issues around VAT. VAT is a consumable tax. And if you look at how it is calculated, you realize that about 6% of producer. So in effect, you are more incentivized to import finished products to sell than to produce locally, because you have to be able to pay VAT at the port on your raw materials. After production, you're paying VAT. And so it's almost like double taxation. And we're saying that we want the tax regime to be streamlined in order to give room for private local manufacturers to be able to thrive and relieve them of all of this tax burden. So really the issue of taxation is very key for us, and we really look forward for the finance minister to address that in a big way. We have given him our consent to a proper writing. We had several meetings with him, and we only pray that they will be able to implement some of these recommendations we have for the private sector.
Great. Thank you very much. Greater Courage, Chairman of AGI, Chiona Mapelu, for your time here on Business Live. Unfortunately, we are unable to bring you the perspective of Guta. We shall rectify that connection and bring him on to speak to the issues. But let's move on to some other stories. Economist Dr. Patrick Osumen has advised government not to rationalize social intervention programs. Rather, they should focus on unplanned expenditure outside the budget. Government, with the help of the World Bank, says it has completed work on the rationalization of some social intervention programs like the free SHS. Now, according to him, these social interventions have small budget allocations and shouldn't be scrapped because of the impact it will have on the poor.
It's definitely worth reviewing any new programs that government implements to see what is working and what is not working. And if you take the case of let's say the flagship program that this government has brought, I think it's important that we do an assessment to see where it has worked and what we can do to improve it. Now, what we have to understand is if our goal is to reduce expenditures, if you look at all those social intervention, the flagship program that we can call social intervention, take the free SHS, if you take LEAP, if you take school feeding, if you take all of them, they are less than 5 billion. That's a very small fraction of our expenditure for this year. So if our goal is to make savings, as far as the program is concerned, that's not what we should be. That's not where we should be looking at. If we want to make expenditure cuts, That is not what we should be looking at. We should be looking at the expenditures outside of appropriation, the unplanned spending that happens every year in our budget. And there are many other things that we should be looking at, and not the small allocation that we've made to help the poor.
Let's touch on this story. Ghana scored an African Transformational Index of 19.1, lower than the African average of 30.3. This placed it 20th out of the 30 countries surveyed. According to the African Center for Economic Transformation, Ghana's debt progress has been weak and unstable since peaking with overall ATI score at 20.6 in 2014. The report revealed that Ghana scored below the African average in every debt dimension, with particularly poor scores in productivity increases and export competitiveness, and a rapid decline in diversification. Indeed, Ghana performed increasingly poor in the diversification category. Let's get on to Zoom and speak with the Senior Director, Research and Policy Engagement at Asset, Dr. Edward K. Brown, for more on this. Thanks so much, Dr. Brown, for joining me on Business Live. First off, help me understand what the African Transformation Index is all about.
Thank you so much. It's my pleasure to be on the air with you today. The African Transformation Index, which we publish, the first one was published in 2014, and we're now publishing the second one. The objective of this index is to help track the transformation trajectory of African economies and to track the successes and setbacks at the country level over the last 2 decades. This particular index covers the year 2000 to 2020, and it assesses Africa's economic transformation along 5 trajectories, 5 dimensions, which I'll come back to later. But the purpose of this particular index is to provide some kind of a guideline, an analytical tool that would help governments, other researchers, academia, even civil society and media, including the private sector, to be able to assess the economic trajectory, transformation trajectory of Ghana against other countries. And in particular, the interesting part of this index is that it helps to track, the trajectory over time from 2000 to 2020. So it's 22 decades. So we are looking at the trajectory, the performance of the African economies over that decade, and that is important to be able to assess where you need to focus on in order to, continue to support the transformation effort. You did mention that Ghana's, fared poorly in 3 dimensions, but at the same time, it fared a little bit more on the human development and human well-being, which is a composite dimension which covers, female employment, it covers income disparities and also income levels. So it is a much robust indicator of poverty reduction. And in that particular dimension, Ghana seems to have performed reasonably well than in the other dimensions. But the problem then is that given the successes that have been achieved, particularly in the LEAP programs and other social programs, there's the need to work a little bit more assiduously, to ensure that the economy is diversified. I'll give you an example. In 2000, 5 commodities, gold, oil, cocoa, nuts, and wood products constituted 70% of total Ghana's exports, 70%. In 2020, it's almost 90%. So within these 2 decades, successive governments have not been able to diversify the economy away from primary production. And what that means is that since you're exporting primary products, you're exporting your employment outside, you're not adding value, creating jobs and all that. So there's the need for government to focus a little bit more in that area of diversification and also to improve on export competitiveness. I'm particularly pleased that the minister is talking about, reducing the taxes in certain areas for the SMEs. But perhaps even more important, is that the government should also provide some patient capital for these SMEs to shore up their capacities to be able to absorb any credit or loans that they are going to be receiving. Because many of these companies are very weak in terms of their governance arrangement, their capacity to be competitive and all that. And that particular area, the upstream areas, are important for governments to support through patient capital. The Koreans did it, the Malaysians did it, China did it, of course, and Singapore and other countries have done it. And I think African countries need to learn from this to be able to provide the kind of support they need, the SMEs need, because they are the drivers of employment and job creation and reducing poverty.
So when next are we likely to see the next reports?
Well, transformation takes time. The first one was in 2014. Of course, we should have come up with one a little bit earlier, but we needed to really, do a little bit more analysis to broaden the database and all that. So our next report most probably would be in another 3 to 4 years, because we want to be able to trace progress in transformation. And on a yearly basis, you may see very, piecemeal improvements. But if you want to see real progress, then you have to go. You would need to do a little bit more over 3 to 5 years period. So maximum in the next 4 years, we should have another report coming out.
Great insight there. Dr. Edward K. Brown is a Senior Director, Research and Policy Engagement at Asset there. You're still watching Business Live. More after this break. Welcome back. Data from the Public Interest and Accountability Committee's 2023 semi-annual report on management and use of petroleum revenues indicates that Ghana's total petroleum revenue was $540 million. The report covers the period between January to June 2023. According to PIAC, over $466 million out of the $540 million of petroleum revenues were allocated to priority areas including agriculture, roads, as well as other critical infrastructure, amongst others. Here's Chairman of PIAC, Professor Kwame Adom-Frimpong.
If you have your resources, there's even no need to plan any amount. You just spend it. But because resources are limited and depends on the revenue from the oil production, you can't say that what I've planned is what I have to get. So they've planned 380 for the 2 projects, but as at 30th June, due to circumstances beyond control, you all know what is going on in the country. All the plans are being put aside, and then reality is coming out. 380, even though that's the plan, 41 has been given to them. And that will tell you that there are other pressures from other sources where it's pushing things down. So nobody knows. This is the plan for 5 years. Who knows, but next year things will improve, and what they are expecting or their plan will be given to them.
Still with them, they are asking the Finance Ministry to comply with the provision in Section 16, Clause 4 of the Petroleum Revenue Management Act. The authority said the ministry should release funds to the National Oil Company not later than 3 working days after the receipt of petroleum revenue in the Petroleum Holding Fund. This was revealed in its semi-annual report. James Eshen reports.
PIAC said it has observed that Cosmos Energy Ghana Limited wrongfully paid withholding tax into the Petroleum Holding Fund in 2020 and 2021, totaling $3 million. The committee also maintained that the Jubilee Oil Holding Limited have failed to pay proceeds from liftings in the first half of the year into the Public Holding Fund. PIAC said this is the 4th consecutive time the Jubilee Oil Holding Limited have failed to pay proceeds from the Jubilee, and the 10 failed, totaling $343 million. The report furthered that the total number of existing petroleum agreements has reduced from 14 to 13 as at the end of June 2023 to the relinquishment of AGM Petroleum's entire interest in the South Deepwater of Tano contract area. About 6.73% of the total 131 million cedis of the annual budgeting funding amount was transferred to the District Assembly Common Fund in the first half of 2023. The semi-annual report also suggested that the Ghana Infrastructure Investment Fund plans to invest $380 million in the Pualugu Multi-Purpose Dam over the period of 2023 to 2025. Out of this, a little over $41 million was disbursed to the Ghana Infrastructure Investment Fund for the Special Investment Vehicle Viability Gap for the Tema Motorway Extension Project from January to June 2023. On some recommendation, PIAC said in approving appropriation, Parliament should take into consideration Regulation 8 of LI 2381 with regards to the cap on the Ghana Stabilization Fund. For Joy Business, James Ishen.
And to some other stories, Director General of SNIT, Dr. John Ofori-Tinkrang, says the informal sector contributors to the pension scheme have seen a significant improvement within the last year through continuous education. Speaking at an engagement with informal workers in Sunyani, Dr. Ofori-Tinkrang urged self-employed persons to show more commitment and interest in their social security and take bold steps to enroll into the scheme to safeguard their future. Precious Semevo has more.
The Senate TUC Bono Regional Forum for the Informal Economy Operators aims at ensuring every worker enjoys social security. Despite the misconceptions and lack of information, the number of self-employed pension contributors is said to have more than doubled within a year in an attempt to prepare for life after active work. The Director General of Senate, Dr. John Ofori-Tinkrang, attributed the increase to education, but admitted that there are more grounds to cover.
When people hear the message, they say, I want to join, and I wanted to join yesterday, I want to join today. The only issue that we have is that most of the people who see the value and want to join, they are above the age of 45. And the law as we have it now preclude them from joining. So people do want to join. It's just that they have not heard the message. It's just that they thought that SNIT was only for government workers. That is how bad it is. People thought it was for government workers, not even including those who work in private companies. So the notion that SNIT is for government workers is not true, and the data doesn't support it. The only thing is that we need to grow the self-employed sector, which now stands at about 54,000, which was only 14,000 a year ago, to cover 1 million, 2 million people.
He further called on the informal workers to see the call to contribute to the scheme as a personal drive to reduce old age poverty.
Pension is a personal thing, especially for those who are self-employed. You cannot rely on your employer because you are not working for some company to pay for you. It is you are paying for your own benefits. Each one of us that is hearing me today, each one teach one. There is a lot of misinformation out there so that they too can voluntarily take the steps to take control of their own future. So that 20 years from now, 30 years from now, 40 years from now, old age poverty will be severely reduced in this country.
Some pensioners in Sunyani had this to say.
My mates who have not gone this way, when they see me, they find me different. One of them tells me that even the whole Ghana is made for us because we are paid monthly. Then when we go on pension, you receive your something also in your pocket monthly. To them, nothing at all. So if they hear this type of information given this morning to us, it will be something so good for them. They will have wished that something like this has happened, for them to have contributed to make their life or their living a little bit comfortable.
The forum was on the theme Sign Up for Self-Employed Enrollment Drive Seed from Senate, Ayodachi, Fano Personal, Precious Semevo Joy Business, Sunyani.
Thanks so much for your company. I am Pius Kojo Baka. For more stories, do log on to myjoyonline.com/business to enjoy the rest of your weekend. Bye.